Hey, what's going on, everybody? Welcome back to another episode of Calvin Lim Investing. And today we got a really cool segment. As usual, we have my weekly trading plan, stock setups to watch. We're going to be looking at about 4 to 5 tickers as usual and just kind of see any patterns, any charting, and sort of my game plan for the upcoming week. With that being said, just a couple of key things to note. As always, I am not a financial advisor or an expert, so please contact one before you begin to invest. Make sure to always do your due diligence. Next of all, whenever you have the chance or you feel free, or you feel like you want to join a stock group, there is going to be a link in the description for a trading community on Discord. Feel free to hop in there, get to know some of the members, and I'll be happy to be in there and answer any questions you guys have. Finally, just the last thing to note, if you would like to support me, please be sure to subscribe and like this video. I really appreciate all the support I can get, and I definitely would love it if you had comments or questions. I really enjoy questions as I get the chance to help you guys out or really get a chance to answer some of the things. So with that being said, let's jump right in. Alright, the first stock we're going to be taking a look at is going to be Tesla, one of my favorites of all time in the last couple of months to trade. So you can see Tesla's trading right now around 678. It had a wild week last week, and let's delete these lines from last time. This is going to be what I have. So it jumped from 656 to the 670s. So there is potential gap to fill. Next of all, the stock held up pretty well around the 674 range last week. So ever since this jump on, let's see, the 28th, it has held pretty well. So I'm going to have that as a major level of support, with this spot being a potential gap down. Now, I'm also going to have the upper bounds going to be, let's see, right around here, 696, but more likely 700 is going to be, let's see, is going to be the very big point, but 696 is going to be sort of that point. If it breaks above this resistance from last week, I think we're going to be seeing a really nice move upwards to about 715, 720. So I think Tesla has a lot of room to go. It needs to break this 696 mark and really hold above it for a long period of time. If it breaks 700, that's going to be a larger psychological barrier, and I think you're going to see a lot more flow into Tesla in the upcoming week. With that being said, if Tesla does experience a dip below 674, you could potentially watch for this gap to be filled. It can go from 674 to 656. That might be one area you got to be careful of, so we'll find out next week to see which direction it goes. So for now, I would be bullish on Tesla above 696 and bearish on Tesla below 656. The next ticker we're going to be looking at is going to be Apple. I have mentioned Apple numerous amount of times. It's been one of my biggest picks going along since it was in the 128 range. As you can see, it made this full W recovery. It surpassed its other level of resistance, which was around 137 area. And this huge nice green candle on Friday, and I think it's going to continue to fill this gap all the way up to 144, which is going to be near all-time highs. So once again, I'm going to be bearish on Apple if it breaks below this 137. If it continues to hold, I expect a gap fill. I may play this gap fill, and I'm going to continue to be bullish once that gap is filled, because I think after breaking all-time highs, Apple can go for a really nice monster run. So with that being said, for me right now, Apple is a pretty slow mover. I'm either going to buy farther out calls or shares. And if I buy shares, I'm going to use them to generate monthly income with covered calls, which I will cover in a separate video. Alright, the next ticker that I'm going to be talking about is going to be another one that has been on my list for some time. It's going to be Pinterest. Originally, I had this sort of gap fill at around 78. The gap was filled, and it was a slow and steady recovery from the bottom of 53 all the way up to 78. If you were lucky enough to buy at this point, you are sitting pretty well off right now. But basically what I thought was that once it broke above the 69 mark, I saw another big fill. I stood corrected. Pins did fill that gap, and then I sold out when it was around 78. My next theory is that Pins is going to consolidate a little bit and then break all the way back up to 85 and potentially 88. I'm pretty bullish on Pins. The only thing you have to worry about is earnings. So if we are planning to play Pins or Pinterest, I'm going to definitely try to play before earnings. The last couple of earnings for Pinterest were about a mixed bag. You had a really great earnings in January, and then their last earnings was a bit of a disappointment, which led to this large downtrend. So that being said, I think Pins has some room to run, but we are a little short on time because earnings is coming up, let's see, on July 30th. So you have about 3 weeks before earnings to be safe, and I'm definitely going to be looking to try to trade the trend until it hits 85. That's going to be one of my other options. I'm going to be bullish above 80, and then if it falls below 78.55, that's when I'll start to get a little bit bearish on Pins. Finally, the last ticker we're going to be looking at today is going to be one of the biggest in the world. It's going to be Amazon, and almost every one of you has probably used Amazon at some point or know what Amazon is, aka Jeff Bezos' baby. But with that being said, Amazon has been trading in a very consolidation-like trend in the last year, ironically. Ever since it hit a high of 3,500 last September, it's been trading between about 2,887 and a top of, about $3,522. This is the daily, but for the most part, it's been trading around this trend. It has failed to hold above this line, this resistance line, 1, 2, 3, 4 times, and in the short term, looks like it's ready to test that mark again. I think if Amazon can finally break out above this price point, we could see a pretty nice monster run for the company in terms of stock. Amazon, has a lot more revenue, but a lot less. When you're investing in revenue, the revenue to market cap is a lot nicer than some companies you might find. That's because Amazon is treated both as a tech company and partially as a commerce/retail type store. So let's see if we can do a little more research. So let's go Amazon revenue. So Amazon revenue for last year was 386 billion. Then they have, they have a market cap of about 1.77 trillion, which is going to be about 5 times its revenue. On the other hand, a full-on tech company such as Apple is going to have revenue of 260. Let's see. They had 200, or that's not correct. Let's go to 2020. In 2020, let's see. Apple had 500. That's net income. Global revenue was 275 billion, right? So 275. Go market cap. So 275 to this gives it to, 275 to 2.34 is about 9 to 10 times the revenue is 9 to 10 is 1/10 or 1/9 of the market cap, which is sort of in line with a lot of bigger established tech companies. So you can see that Amazon's total ratio of revenue to market cap is about half of what Apple is at, which currently leads me to believe that there's definitely room for it to be valued as other similar tech giants. So I'm pretty bullish on Amazon. I'm going to say that, let's look at the 15-minute. get a better feel, I would say that, you know, I would be pretty bullish if it can hold this area, but then with a long-standing support at around 3400, 3410, and I'll be looking at it this week to identify some potential areas that I could play. Amazon's a little bit more pricey, so I'm definitely going to have to really go through it and find one or two really great plays. As usual, I do suggest going out further in time, but with stocks such as Amazon, it can be pretty expensive, so I may try to grab a weekly or something if it looks great. With this being a short week, options are definitely going to be a little bit cheaper. The implied volatility is a lot lower, so this could be either a hit or miss week for a lot of traders, and I really like the potential or the prospects of being able to pick something up for a short week. So I'll be looking on Tuesday, tomorrow, to see what's up and to see if there's anything I can grab. Anyways, with that being said, thank you guys so much for tuning in today. I know we only went through 4 tickers. They're all super large tickers for the most part. They're all they already have high valuations, but that's the type of way I like to trade options, is to find options in mixed shares. I like to find bigger tickers with relatively more volume, or something more established that you will be a little bit safer when it comes to news or short squeezes, etc. You're a little bit safer, it's a little bit less volatile, and it's a little bit more fundamentally sound. That's just what works for me. Some people have different strategies, ideologies, and everybody has their own system. But for me, I do like to trade a lot of large caps. So that being said, I hope to see you guys around, and be sure to subscribe and like this video. Thank you guys so much for all the support.